Hello, good people. I'm back again. This is um this is a trade that I shared on Twitter, or rather X, on silver USD, and you saw that it played really well. So I want to take you through the logic behind this trade and why I was able to catch some $8,300 as you saw posted earlier. So if you look closely to this chart, I don't know whether you can see anything, but this is Monday's trading here. Then Tuesday trading comes down. Tuesday takes out this low, so we have a small range of Monday high and Monday low. So that range, when price took out this low here, my work was to look at where is it likely to trade to next. Now if you have taken Monday's low, I'm anticipating the next day to open low high, close above Monday's high. That is already bias determined. And then you see what we have here. We have relative equal highs here with a PDRA here, a CB, a bearish FVG. So once I see this, I love liquidity. I want to see old highs and old lows being swept before I do anything. This to me is something that I admire. Now when this low was taken, price, my interest was now Monday's high, so price gravitated high. But I want to share with you what was happening inside here before we started to push this price higher. Now look closer. This is a 4-hour chart, and you guys, you've realized I really love 4-hour chart. It really makes my work easier. And then I take 4-hour as my most of the time as my higher time frame, and then from there now I can zoom into lower time frames, trying to check whether my setup will come through for me. Now I want you to look closer here, whether you're seeing anything. Let me pull this up. Okay, hopefully you saw that before bring up these annotations. Now this is Monday's low. When silver is taking this Monday's low using this candle here, gold did not do that, so we had SMT. So we have a sweeping liquidity SMT with gold. Then you look closer here. I can make this more visible a bit. Look at that. So we had an inversion there. Price really did not even feel this completely close below it. So you see, it's just really tried, and then it left. Now after price closed above this, there's no way you can just enter that because you have another PDRA here. So my entry was based on this IVG. It could have been a balanced price range if it has an overlap of fair value gap this side, another fair value gap this side. Then yeah, so this to me is an IVG. Now when price closed above here, you know the drill. 15 minutes. Rather, I went to 1 hour first. I checked 15 minutes and I realized there wasn't much, so I went to 1 hour. Look at this. Most amazing, guys. So in 1 hour, so I can remove this one now because it has placed its role, and then I can also now bring this here because now this is the current price that we have here. Yeah. So early enough, somebody could have bought down here. You see that we have a liquidity sweep, we have a displacement high, which has left what? An FVG, and all these down close candles, that is a change in state of delivery, CISD there. Yep, that one. So we have market structure shift by the order block or change instead of delivery. We have liquidity sweep, and then we have SMT with gold. So gold was not really good. That's why I opted to work with this one. So when price is like this now, I could have not taken an entry down here because this is outside my kill zone. Let's pull this up. See that? So I was waiting for, but remember this one is below the 4-hour IFG that we just modified to this one. Now we have a new FVG here, bullish, and say plus. Yep, make this visible like that. Yeah, see that? Now what time is this? This is London open. So now I'm okay to take, after creating this FVG, and return to that. That can be my entry. Stop loss either below this swing low or slightly below this order block. Most of the time you realize if you place your stop loss there, it might not, but it might get tapped. So sometimes you have to, but according to your risk to reward, you know where exactly you can place your stop loss. So this is London. So you see we have time, and then we have price. All the time, if you work within kill zones, you are likely to be on a higher bargaining power when it comes to taking your entries. So don't take entries because you see a setup happening any other time frames or any other sessions that you don't even trade. Mine is either London or New York. So an entry there, what price did? Pump Dia took out this is already profit, and then it consolidated. Then now a classic buy day is I want to see London forming the low of the day, then New York continuation, and we tagged those buy side liquidity. And you realize from the previous episodes I said kindly ensure you target session highs and lows, equal highs and lows. Those are very nice areas for you to book your profits. And as easy as that, that is how I managed to book some really nice profits using simple model, simple strategy, and all the time. And I keep repeating, I don't have to bring new things into my model. I only refine and find things that work for me, and all the time ensure kill zones are at your fingertips. If you don't remember, use the Lux Algol indicator to get you up to speed. So guys, this is the review of how I found buyers to trade how I found buyers to trade the silver pair. And as you can check from the X feed, I already alerted you on what I was to do here. So up to this level guys, hope we find this insightful. Until next time, be safe.